Let's take a look at another one. Bottoming tail bar. Well below the 20-period moving average. A lot of air in between the 20 and the top of the bottoming tail bar. You buy into this bar toward the end of the bar's formation. You place a stop and you sit back. In fact, I tell traders, get out of your chair and go watch Oprah or something. Do something. Get out of the way. You are the problem once your buy is in. Because now most traders are watching their P&L. They're looking at the bar. Wait a minute. Here's a red bar. Wait a minute. Maybe this is not going to work. Oh, here's a green bar. Maybe it is going to work. That Oliver's a genius. But wait, he's not a genius now. Oh, he is a genius. Right? You're not playing the market. That's the market playing you. I traded for a firm, many years ago, how I got started as a professional trader. And it was a firm that had about 320 traders. And we sat at long tables, like about the size of this. And you could literally look down and see the traders. And what you saw was just like horses racing, heads bobbing back and forth like this. You look down, and the heads were bobbing. Now, back then, there was no direct access or trading by keyboard or mouse. We had phones. And why they were red, I don't have no idea, but they were all red phones, right? And you picked up the phone and you immediately got the order room down the hallway. So what you saw, I said on the end, when I looked down, what I saw was heads bobbing back and forth and hands reaching for the phone and not reaching for the phone. They put their phone on the phone, pick up the phone, put the phone back down, heads going back like this. And that's the market playing you. What I've found, that there are only a small handful of incredibly clear, unquestionable moments in the market when you have to act. It's not a guess. It's not, well, I can act, but I don't have to. No, you have to. And I only teach the have to moments because the biggest enemy you have is doubt. When you see this type of bar well below the 20, there should be no doubt. Now see that bottoming tail bar? That bottoming tail bar is not a kamikaze. All right? It doesn't have air between. But let's keep going. Let's look at a few more. Bottoming tail bar well below the 20. Now, what will make you doubt this is that typically your stock, what it has been doing before a kamikaze bottoming tail bar is doing what? Collapsing. So the doubt is going to swell like, look at how ugly this chart is. Look at how terrible the performance of the stock has been over the past week or the past month or the past quarter. It's going to look scary. It's way below the 20, which means that it has collapsed. All right? But I'm telling you, this bar can only be formed when 90+% of all the big moneyed institutions that play that stock go around to the buy side. Seesaw. One side is sell, one side is buy. The seesaw is in the middle. Then they go to the buy side and flip the seesaw back the other way. This is every institution in the stock now hitting the buy button all at once. It's the only way you can get a bar like that. Now, I'm not talking about in stocks that trade 2 shares a day. Anyone can create an elephant bar by buying a few thousand shares. But if you're dealing with solid, rich companies, those types of bars cannot be created unless it's by big money institutions acting in tandem at the same time, all on the same side. Now, bottoming tail bar, well below the 20. Some air in between the 20 and the head. That qualifies as a kamikaze. Risk it all. Stop. There's your run. Now, the question is, well, Oliver, how long do I let it run? All right. This is where the art of trading comes in. The art is on the sell side. You should never be artful on the buy side. Be artful on the sell side. Okay, I take some off. When the stock gets too far above the 20, I take a third off. Well, that's great. Or if it gets above the 20, I now have a trailing stop using the 20-period moving average. That's workable. I don't care really what you do in profitable territory. What I do care about as a trader of mine is what you do when everything that you plan doesn't happen. when all the lights go out and your plan has failed, that's when I watch you like this. But, should I take my fortune now? Or do I take half my fortune, or do I take all my fortune? That's up to you. All right? And that can be the art form of trading. I teach my traders that since stocks can't remain well above the 20 for long periods of time, your profit taking should be in an elevated position way above the 20. All right? That's when you start to take some profits. Now look at this bottoming tail bar. Bottoming tail bar, well below the 20, air in between the high of the bar and the 20. Buy into that bar, everything you have, stop under the low, and there's your rally. Now remember yesterday, I said that every winning play you have to add to. Well, Oliver, if I kamikaze, how can I add to it? Borrow. Go to your mom, go to your dad, go to your uncles, borrow some money, buy more. This is going to be a big winner. And I teach my traders that you are supposed to add almost every time a single solitary red bar gets taken out. Now let me talk about that just a little bit because that's important. This is a single red bar all by its lonesome. There's no red bar beside it. That's what I mean, a single red bar. Now we don't know when a red bar forms if another one's going to follow. But if another one doesn't follow and then a green bar forms after that one, now we have a single red bar all by its lonesome. Whenever the high of that single red bar gets taken out, you buy into the bar or add into the bar that took out the high of your single red bar. So single red bars ignored are adding points unless they happen up here separated from the 20. You never want to commit a buy, elevate it there. Remember the 20 yanks the stock back in. Do you see that there's another add opportunity? Yes? Do you see yes or no? Yes. Several bars later, add again. And there's your run. Beautiful, beautiful, beautiful. These single red bars are very, very interesting phenomenon in the market. Bottoming tail bar, way below the 20. Okay? Space, big bar, so you may have to adjust your buy. Instead of doing a kamikaze, you might have to lighten up your buy because the stop is so far away. All right? And there is your run. Here is your add, single red bar, all by its lonesome. The bar that takes out the high of the single red bar is another buy bar right there. Beautiful, beautiful. Any questions on this so far? Yes, sir.
On trading on one-day bars, you say at the end of next day, most charting packages show you only the day and the day before. So how do you deal with all the points in between when you want to trade at 4 p.m.?
You mean right before the close?
Yeah.
You don't have your bar,
it's from the previous
but
day.
you don't have a real-time bar forming that day?
No.
Oh, well, you need another trading platform or something. All right? No, the bar that is trading today is actually moving tick by tick. That bar is growing throughout the day, and you're watching that grow throughout the day. All right? It shouldn't just suddenly appear after the market closes. All right?
During the current day,
But-
per minute or per 5 minutes or whatever.
Right, but you don't have a daily bar that's growing. Like if you had it on a day, that's interesting. See, on my charting, in most charting packages, if you set the current day to the daily, you can look at that daily bar, and that's the bar that's moving up and down. All right? Now, here, bottoming tail bar. Now, I think I have time to talk about, guys, my traders would buy this bar. My traders would buy that bar. My traders would buy that bar. My traders might take some off on that bar. Solid green bar, elevated well above the 20-period moving average. Space in between. Take some profits on that bar. Get back in on that bar. And think about taking some profits up here now that it's elevated well above the 20 again. And this add and reduce can take a 30% gainer and make it into a 90% gainer if you play the add and reduce spots right. All right? It's very fascinating. Bottoming tail bar, well below the 20, here's your run. These are all stocks as of yesterday. This is yesterday's bar. All right? All stocks as of yesterday. And just notice, guys, we get above the 20, can't stay there. We get below the 20, can't stay there. We get above the 20, can't stay very long. Get below the 20, can't stay very long. And it's this move away from the 20 that if you could limit your actions to there, how great would your odds be for snaps? Huge. Huge. You're rushing me? I got to go? All right, okay. My boss is talking to me back there. All right. Guys, look, what are you thinking about doing now? Buying, right? Yes? Big giant bull elephant bar, you buying? No, you're not buying. You're selling. Obviously, you're thinking about selling. Bottoming bull elephant bars way above the 20. Stop becoming buy bars. They're sell bars now. Look at what kicked off the rally. Now, very quickly, can you find the bottoming tail kamikaze? Yes, that's pretty easy. It's happened in March, the middle of March here. There you go. Well below the 20, there's your run. This is Friday's activity. All right, let's take a look at this one.